Hello, wonderful audience of Accurate Peeps. This is your guy once again, and in today I am going to be bringing you another topic on how you can manage your trades that you have taken, and also that's your running trades that are in profit, how you can manage them, and then being able to protect your account against unnecessary reversal trades or unexpected reversal trades that might move from profit into loss. Okay, so I'm going to be talking about that, and I'm also going to be talking about risk management. Okay, how you should manage risk on your account. That is a little bit different from the trade management. Then also I'll talk to you about psychology, that is the trading psychology, and I'm going to use my experience in the trading field for the past years to talk to you about trading psychology. So I'm not going to go the traditional way. If you want to watch the traditional uh, risk management videos, there are so many of them in on YouTube that you can watch, and they are all good. I'm going to talk to you based on my experience. Okay, all right. So at the beginning of this free course, I told you that everything I'm teaching you is an in-depth knowledge. Okay, and that it is not the usual free stuffs you see on YouTube, but this is a pure course I'm teaching you. That is the style I used to trade myself. Okay, and it is what I'm teaching. If you can take it serious, you should be able to make consistent profit every month or week. You will not win always. I always tell you that, but you should know that you will always make profit with this strategy. Before I dive into the video proper, if this is your first time here on the channel, do well to subscribe to the channel, and don't forget to turn on the bell notification icon so that anytime that we release a new video, you know that Accurate Tips have released a new video. Also, don't forget to share this video, smash the like button, and also join our various social media handles. All the links are in the description of this video. Okay, so join our Telegram group, is very active, so don't miss out on the Telegram group. Join it and join the conversation there. You can DM me directly, my handle is there, whether on WhatsApp or on Telegram, and I'll respond to you as always. All right, so now let's start. So I'll first talk about trade management. Okay, then I'll come to risk management, and I'll talk about psychology. So I'll try as much as possible to make this video not to be very long. So for instance, let me use this my two previous trades that I took here, okay, to give you an example. All right, I know for instance this first trade that you guys see here, you'll be like, wow, prof, that is 1:65 RR. Yes, it's true, that's 1:65 RR. But the truth of the matter is that not all my positions hit the 1:65 RR. Okay, and the remaining position, even not the full lot, hit the 1:65 RR. What do I mean by this? During our time when we were doing the course, you see that most of the time, as I mark my areas, you see me put lines, certain lines at certain key points, and then you see me write something like partial fake profit. Okay, you see something like this PTP, and you see FTP. FTP is the full TP. Okay, then the PTP is my partial profit. Okay, that I fake on my trades. Okay, so there are times I'll take more than one partial profit. Okay, there are times depending on my total profit. Okay, for instance, on this trade I took more than partial profit more than once. Okay, so now this is what I do. Mostly I always make sure that my setups are giving me more than 1:3 risk to reward ratio. With what we've learned, always make sure that you have a setup that is giving you more than 1:3 risk to reward ratio. Don't forget about that. Okay, always try to get 1:3 risk to reward ratio. It's very, very important that you have that. Okay, before you even make your entry, make sure you have this ratio. Okay, now why is it important? Always I love to be making 3 times what I'm risking. With that, even if I lose, let's say 2 trades and I'm winning 1 trade, it means that 1 trade can cater for the losses from the 2 trades that I made previously. Okay, now if you are doing 1:1, that is not proper. Okay, because if you lose, let's say 2 trades and you win one, you are still in loss. Even if you are doing 1:2 risk to reward, it is still not proper, because if you lose 2 trades and you win one, that will be break even. Okay, we are always looking to be in profit. So what I do is mostly I always take my first partial profit at 3:1. So for instance, this trade, because my SL was extremely small, what I did was I took my first partial profit here, and that was 1:12. Okay, RR. So that was where my first partial profit was. Okay, this is my final. This is where my first partial profit was, this area. Okay, so this was my first partial profit. I took another one here. Okay, now I didn't say this, but this is the thing. Once I hit my 1:3, okay, what I do is sometimes I go 3 positions, 4 positions, depending on how much I'm risking. Okay, so my SL tells me how much position I'll go, because let's say for instance, I mostly like to risk. Okay, that is me. I mostly like to risk, depending on the account size I'm using. Okay, between 0.5 to 1%, maximum 1.5% of my equity. Okay, that is what I mostly like to risk per trade. Okay, but I depend on the capital I'm using. That's what I'm saying that. So for instance, if that 1% is, let's say, $500, okay, I look at my SL, okay, the pips in terms of my SL. If it is, let's say, 10 pips, okay, $500, let's say let's say I'm dealing with maybe a $5,000 account, or $10,000 account, $25,000 account, depending on the account size I am using. Okay, so that $500, I'll divide it into depending on the lot I'll use. So for instance, if let's say one standard lot will give me maybe that value in terms of dollars in losses based on my SL, I will not just use one lot on one position. What I'll do is I'll divide it, okay, maybe into 0.1, 0.1, 0.1, or 0.05, 0.05, or 0.07, depending. So I will divide it such that if you total everything, it will be equal to what my total loss. Okay, that or the amount I'm looking to risk. So let's say if I have 4 positions, once I hit my 1:3, I close 2 positions fully. Okay, not partially, fully 2 positions are closed. Now when I close those 2 positions, remember I taught you so many things. Okay, I will look at, is there a possibility for a second entry, third entry positions? Am I willing to risk those positions? If I'm not willing to risk, I'll still hold just my first entry position. And then mostly I love holding my first entry position. I only go into other entry positions if I miss the first entry position. Again, now what happens is, for instance, if I'm using, let's say, 0.1 on each position. After I close the 2 position, what I do after this is that I take, okay, I'll take one third partial profit on the remaining 2 positions. All right, so if it was 0.1, I'll calculate one third of it and take close partial on the remaining 2 position. Then when I get to, for instance, as I said, this trade was a longer trade. Okay, so if I get here, what I do is I close one more position fully, okay, and then I now move my SL into what? Into not to entry. Okay, when I take first partial here, that is when I move it to break even. But after I take my second partial, what I do is I will now move it to somewhere here just above this, okay, high here. All right, if you go to the lower time frame, that was a high. Okay, this on 15 minutes. If you go to 1 minute, this was a high. All right, so I'll move it here. Okay, then now I will allow the one remaining position to run. Now if it gets to this low, what I'll do is, let's say for instance from the 0.1, I now after taking my partial, I now have about, let's say, 0.07, okay, lot size running. What I'll do is when we get here, I'll take another 0.02, okay, lot size out of it, so that it will be left with 0.05. so that will be my partial at this point, and then the remaining 0.05 now I'll now allow it to run towards FTP. Now once I take this partial, I'll now move my SL from here to this high here, this pullback, this high here. Okay, that will be where my new SL position will be, and then I'll allow. So even if the trade reverses again and comes to hit my SL here, I've not lost, I've not break even, and I've closed majority of my trades or my positions, okay, that I've opened. So that is how you manage your trade. Okay, you don't allow your trades to just run like that. Yes, you see it, and even that's one position I left to hit that 1:64 in partial trade or in partial lot is still significant, much significant in terms of profit. So that is one thing you guys need to understand. For instance, when we come here, this is what 1:9, okay, and my first partial is to what is 1:3, because here this thing is a bit big myself. So this was our 1:3 level here. Okay, so 1:3. Once we get 1:3, we take our partial. Now what is going to happen here is that once I take my partial here, let's say I open 3 position, I'll close 2, okay, on full here for my 1:3. Okay, then my one remaining trade, I'll take 1/3 of it, then I'll move SL to entry. So in case even price comes, so here you can see price reversed back to this area. But I see this is my entry, this is where my SL was moved to. Price didn't take me out before shooting down. Okay, now the reason I used 8 cap to do this analysis is I'm using the prop firm I'm trading with, they use 8 caps, so I have to analyze with 8 cap to be able to get my entries on point and my SL positions on point. So later on, price hit my final TP, as you can see here, and last week basically these were the 2 trades I took, because I hit my target with those trades this week. I didn't trade on Monday, I didn't trade on Tuesday, I traded on Wednesday, okay, traded on Wednesday and Thursday. So after that I didn't trade again, okay, because I've hit my target that I set, and that is how I trade. So you need to be disciplined. One thing I'll talk about during my the third part of this video. Okay, so let's go to the second part of the video. As I was saying, that is the risk management. Okay, so as I said everything I'm saying is based on my experience. So what I normally do is, let's say for instance, I know most of you use $100 account, okay, which to me is not something as a trader you should be using because like your emotions that will come with using an account size like that is huge. Okay, so unless you master and become very very conversant with your trading strategy, you are perfect with what you are doing, and you are able to master your emotions, just find a very good account. So for instance, those of you who don't have much account, maybe you can raise a little money, and let's say you can afford a $5,000 account from a prop firm, okay, or maybe 6,000, 6k, okay, account from a prop firm, and then you use that to trade. But with prop firms, take note, before you start trading prop firm, make sure you master everything that I've taught you very very well before you start prop firm, because those guys have strict rules. If you don't follow the rules and you didn't pass your challenge, it means the money you spent in buying the challenge account is gone, and it will be used to pay serious traders like us who are winning. Let me tell you, if you want to also be part of those that will be receiving payment, they have to learn these things and understand them. Okay, so for instance, let's say if it is $100 account, okay, if it is $100 account you are using, what you do is, if you want to risk 1%, okay, 1% of that $100 account, you just take your calculator, okay, you take your calculator, and then you multiply your 100 by 0.01, okay, so that will give you $1, okay, so it means you are risking $1 of your account, but that is really small, quite small, but it's normal. Remember, you'll be using, with $100 account, you'll be using a 0.01 lot size, so $1 risk is like 10 pips, okay, that's like 10 pips, okay. So if you are using, let's say, $1,000 account, and you are risking 0.01%, it means you are risking $10 on that account, okay. So you can imagine risking $10 on $1,000 account, and you are making like crazy amount of money with this kind of because with $1,000 you can use a maximum of 0.1 lot, so you can divide that into like 0.02, 0.02, 0.02, like 4 positions, okay. And then you use that to trade, so that you can close your partials along the way. All right, okay, so that is one thing you need to know about what the risk management, okay. I try, but you can lose, you can risk between 1 to 3%, okay, maximum 3% of your account. So for instance, on $1,000 account, you can risk up to $30 per trade. That is my advice to you guys. You shouldn't risk more than that, okay, so that you can easily recover your losses. But once you need to understand is, to do that, you should be able to understand how the lot sizes are working. You don't just say because it's $1,000 account, you just start 0.1 into the market. No, what is your risk factor? You should understand your risk factor, calculate your risk, and then know what lot size to use in order to attain that risk. So just imagine you are risking $10, but when making profit you are making $30, okay. When you make $30, then that means you have made what, 3%, right, of your account. So if you're able to make 3% per trade on your account, and let's say you take about 5 trades and you're able to win all those 5 trades, 3 times what, times 5, that is 15% on your account. It means 30, so 30 times what? Times that's a 5 trades, right? So 30 by what? By 5 will give you what? $150 on your $1,000 account. So that is like 15% on that account. You get a point. So you guys should understand how to calculate your risk factor, how to calculate it, like the percentage you are willing to what to risk, and how you are going to calculate it, and the lot sizes that you will be using to trade. There are certain things I don't need to tell you. You can just go to YouTube and type them there. For instance, something like lot sizes, account sizes, and their corresponding lot sizes. Just go even to Google and type what lot size should I use for maybe $1,000 account. It will give it to you. Okay. All right. Last I remember, somebody requested that I should make a video on how you can connect your trading account to MetaTrader 5. Maybe I'll find time to do that within the week, or I'll just post a video, a random YouTube video that I think has demonstrated the step-by-step procedures. I'll just post them on the channel for you guys to just watch it and then follow suit. All right, now let me talk about risk management. As you guys know, market has already opened, okay, for the week, but I'm not going to be looking at the market right now. I'll look at the market later on, maybe tomorrow. All I'm going to do today is to be marking my weekly highs and lows, Friday highs and lows, to just know my liquidity levels. And also we are getting to the end of the month, so I have to locate the monthly highs and lows, the lows and the highs of this current month, so I know where price is heading towards. I love liquidity, so I always want to know what price is doing, and also to find the imbalances that are close to price and trade based on that, and other confirmation that we have learned about in our lessons. Okay. All right, guys. So now with the psychology aspect, okay guys, now trading is a business. Let me start that way. Trading is a business. So if you want to be successful in trading, you have to treat it as such. I always say this, okay. Why am I saying this? A whole lot of people, when they put their money into a physical business, then they become so cautious, they become so careful not to make any mistake, to lose their capital, or for the business to collapse. Okay, same thing applies to trading. You don't need to waste your money. Remember this. You don't need to waste your money. If I say waste your money, you don't need to go and be blowing your account. You don't need to go and be blowing your account. Okay, guys, so take notice of that. So the first thing you need to know is you have to psych your mind that trading is a business, not a gamble. It is a business and not a gamble. That should be your first thing that you put in your mind. Okay, so now once you know trading is a business, means you need to treat it as such, right? You need to do to treat it as such. Good. Now, to do so, it means that you should know your risk appetite. What am I willing to risk in the market? How much risk am I willing to take? How much am I looking to lose? Okay. All right. So that is one thing you need to understand. Then you need to be disciplined. Now, when I talk about being disciplined, I mean you should learn to follow the rules of the game. Let me tell you, if you are not disciplined in this life, it will show in your trading. If in this life you are not serious, it will show in your trading. If you are not disciplined, it will show in your trading, because you always break rules. If you are somebody who always break rules, it will show in your trading. You can't hide it in trading. Okay, so you should understand these things. You should know that in trading you need to be disciplined. If you are to look for ABCD, before you make an entry. Make sure you look for A, B, C, D before you make an entry. Don't go and say, I've seen A, I've seen B, I've seen C, I've not seen D, but since I've seen these three, let me just risk it. No, that is a gamble. It means you are gambling at that moment. Now, this brings me to the next point, that is patience. Okay, so as a trader, you need to be patient in the market. For instance, let's say, okay, I'm looking that price will either take out this liquidity over here. Okay, so let's say I'm looking forward for price maybe taking out this liquidity. Okay, creating a single candle order block. Okay, pushing down, giving me maybe some inducement. Okay, taking that inducement and then giving me an entry over here before I make my entry, and then allow the trade to move to my next liquidity. Okay, there's one liquidity here, that is today's current low. Okay, so maybe you target here. Now, if that is your strategy, make sure you get all this confirmation that you are looking for. Okay, make sure you get them before you make your entry. You don't just say, oh, price get here, it has taken liquidity, you enter market. No. You wait and get all the confirmation you are looking for. Okay, all the confirmation you are looking for, get them. Get the confirmation first. Follow your rules, follow your trading strategy. Okay, before you enter the trade. You don't just enter trade blindly. Please, guys, don't just enter trade blindly. Okay, because as you can see, this liquidity, price will take them. Okay, this liquidity, Friday's high. Okay, now let's see, even Thursday's high. Okay, if I'm not lying, Thursday's high has not been taken yet, so a lot of liquidity above here. So that is one thing you have to know. You have to be patient. Be patient. Once you get your zone, be patient. Not that you just get the zone and then you start taking trade. No, have all the conditions met. So you need to be patient. That's one thing you need to understand. Okay, all right. Now, another thing I have to talk about is when you are winning a trade, allow your winning trades to run until it gets to your various targets, as I explained in the trade management key. If you get to your first take profit, you take profit. If you get to your second take profit, take profit. If you get to your final take profit, you take profit. It's as simple as that. No back and forth. And also, a trade that is red, don't close it. That is why SL is there. Once you have put your SL, there is no need for you to go and be closing a losing trade. Once you close the trade, it means you've lost. But as long as the trade has not hit your stop loss, allow the trade to run. You have followed the rules, you have obeyed all the criteria. When you lose that trade, that is a valid loss, and it is part of the game. It's part of the business. Okay, so now if you go and close your trade, and some of you, when trade is in red, then your body temperature is high. It have happened to me before. Some of you will be visiting the washroom 10 times. Some of you have to go and open shower on yourself. You get it? No, see, just relax your body, enjoy trading. One thing about me these days is I open my trade and I open the trade, set my SL, my TPs and everything. First, my first TPs, the number of positions I want to close at my partial, I set those 2 positions or 3 positions depending on the number of positions I open. I set them at that, I set their TP at that level. So once they close, my alarm will trigger on my phone. Okay, then the notification will trigger on my phone. MT5 will notify me that my positions have closed. Then quickly I can now visit my MT5 and do what? And take partials on the remaining running positions. Okay, when it is news, okay, That is one thing I want to talk about. News trading. When you are trading, when you want to trade during the news, I told you guys that with what we've learned, you shouldn't be afraid of news. You shouldn't even care what the economics are telling you, because it always favors you. Okay, we are just, what we are doing with this type of order flow trading is that we are just following the footprints that the banks have left. Okay, so it's like we are the people gathering the remains, okay, of what they have eaten. eh? So after the news comes, it always need to pick liquidity. Okay, it needs fuel to move. You understand? So the nearest liquidity is always visited. I taught you guys, those of you who are practicing, I know you have experienced it last week, and you saw how news was picking your liquidity level, your zones before bouncing. It always goes in your favor, so you don't need to be rushing. Those of you go and do buy, I told you, if you open a trade before the news, close it. Once it is in profit, close it. Even if it is negative and it is not huge, just close it. Even if it is huge, it's better to take that loss. Wait and reanalyze, especially reanalyze the chart properly, and know if you should hold that trade before you hold it. If you see liquidity hovering somewhere that you think it can reverse against you, close your trade and wait for the news. Okay, so those are the things. That's why I say I'm not going to be talking on the traditional way of psychology. I will drop some psychology books and videos on the page for you guys, but these ones are from my experience of trading. Then you need to be consistent on the chart at least every day. Spend time on the chart at least every day. If you don't spend, you don't spend. At least spend 1 hour to 2 hours on the chart, either back testing or analyzing the chart. And as a beginner, I would advise you to focus on only maximum 2 pairs. Okay, so between 1 to 3 pairs, but maximum 2 pairs as a beginner. Master the ins and out of that pair. Okay, so if you want to trade GBP USD, just focus on it. If you want to trade USD Euro USD, just focus on it. If you want to trade only USD JPY, just focus on that. If you want to trade gold, just focus on gold. If you want to trade US 30, just focus on it, so you don't become jack of all trade and you can't monitor your trades and you'll be missing out on trades anyhow. Okay, so guys, that is it. Okay, I wish you all the best of trading week. Okay, I wish you successful trading. God willing, this week I'm going to start another new prop firm challenge. Okay, so those of you who wants to trade prop firms, you have been asking me to do reviews on prop firms. God willing, I'll start doing reviews on some of the prop firms. Okay, based on my own research. It's not all of them I'm trading with, but that doesn't mean they are not working. I'll give you my review, but you also must do your due diligence to be sure that they are genuine. Don't just take my words for it. This is why I have disclaimer in the description of all my videos, because Forex is not for everyone, and it comes with a lot of risk. You need to understand them. I'll see you in another video, but I am on the page with you guys. Drop your questions and I'll answer it all for you. Have a blessed trading week.